Good morning, everyone. Hope you can hear me okay. So, what's today about? Well, just want to go over some of the parameters we're watching in here. So, number one, just keep in mind that it's a slow day because of Jewish holidays. So, you don't have to go crazy in here one way or the other. So, longer term, I think there are longs and there are shorts. And that's how I'm looking at the markets in here. I don't see a lot that I want to go crazy with one way or the other. So that's where I am. So just don't see it at the moment, just to let you know. I want to see it. I don't see it. So that's where I am right now. Give me 1 second. Give me 1 second while I look up something. So that's what I'm watching right now. I don't see the trades at the moment, and I'll just show you some stuff I'm looking at. So, number one, I'm looking at some divergences between moving averages. So, I look at a lot of things like moving averages. I just want to let you know. So, I'm looking at a lot of indexes versus their component moving averages. So, what I mean by that is I'm watching the transports on the upper left. I'm watching the Russell. I'm watching the ES. I'm watching the NASDAQ. I watch them all. So, and chart patterns mastery, I'm not doing a lot in here with other things at the moment other than staying in what we're in. So, just to let you know. So, that's all I'm doing in here. So, right now, I'm looking at these divergences. I'll put them up for you because I had them ready for you. Here you go. I look at things in relation to their 50 moving average on a daily. The transports are at it. The Russell is close to it. The ES is only 150 points away. That's a big warning sign. Doesn't mean it's going to happen, but that's a big old warning sign. Let me see if I can copy and paste this in here for you. So I don't use a quote trend, just so you know. So in my watch list, I don't have a quote trend. I don't use that. So I'm just watching. You can, if it works for you, great. So it works for you, great. So what I'm watching in here today is about traders probably flattening, but I want to show you on what it appears that they are using as their tells. So every day the tells change. So we've been calling the tells beautifully. So what do I mean by this? Well, number one, when does oil matter? When does the Dow Jones Commodity Index matter? There's a time and place when they matter. So I'm just telling you today, you saw that spike in the crude. You saw a sell off in the ES. You saw the crude oil doing nothing in here. You have the ES doing nothing. So the NASDAQ's trying to hold up, but I'm just telling you that at the moment on a slow day, I don't think you're going to see a lot happen. So that's number one. Number two, though, is the writing on the wall about this. I need to see the Russell really rally and the transports really rally. Transports economically sensitive, Russell economically sensitive. The dock workers strike doesn't help. So, just keep that in mind. And chart patterns mastery, I would love to go in here and do something neutral. Now we're already in some stuff, some winners, a couple of them losers. We're in natural resource stocks. We're still in wheat, but I want to show you some of the other stuff going on. So let me show you. So number one, how do you know what to key off of? Like I said, every day it changes. Eventually, if the transports don't hold, I think the XSP or the SPX is going to here, down to here. But right now, it's a non-event with the unemployment report coming out. Non-event. That's why you usually look to do something neutral. XSP is a tenth of the SPX. So just keep that in mind in there. And I'm watching that carefully. Now, just to let you know, we're watching the pot stocks and we're in some of those. We're going on good patterns. That's what we're going on, good patterns. And that's what we're looking at. Now, I want to show you some of the stuff and why I think it matters. Number one, and I did Trader TV last night and I showed this. Like I said, there's no magic bullet for the markets. I just can't stress that enough. And you need us or to find what the correlations are. So this is why we were short the bond market. We were short the bond market because the commodity index was going up. That is not going to change tomorrow with the unemployment report. Just keep that in mind. It's just not going to change. When this went up, we said I said the bonds were going to go to 123. So when this broke this rectangle, the probability is this bonds were going to go to here. That's why I told everybody in like triple rooms. So that's what happened. So the bond market cares about inflation. If you see the inflation going up, you're going to see the long-term bond go down. I mean, that's as simple as it is. So you're going to see the long-term bond go down. So and you saw it this week with Powell. On Monday, he said he doesn't care about the employment that much, but he's probably not going to cut as much. And that's because he's watching the inflation as well. So what does the Dow Jones Commodity Index tell you today? Well, I'll show you what it told you yesterday. We'll take the non-24 hour. Yeah, we can take the 24 hour. So the commodity index rallied, the bond market sold off. The commodity index consolidated, and the bond stopped going down. Yesterday or 2 days ago, commodity index went straight up. We were short TLT. If you're in our central room in our chart patterns mastery, you know that. So, and we nailed the TLT. So when this rallied, the TLT went down. But you were also combining the bear flag and the TLT. So the commodity index rallying, the bear flag was more likely to work. Commodity index sold off after the opening yesterday. So guess what? We covered our TLT. So commodities mattered to the bonds. So, and some days the crude oil matters to the ES. So I would watch this. Is this a bull flag in the crude oil? Today, the ES cares. They care about instability in the Mideast. Crude oil is a great gauge. If there's instability and crude oil doesn't rally, then the ES isn't going to go down. That's the way it looks to me. So that's where I am when it comes to everything at the moment. So I just think it's a non-event today. So I'm actually looking at doing something neutral in the markets for today. I don't mean every day, but I'm talking about today. So that's what I'm watching in here. So just that's what I'm watching. Chart Patterns Mastery, like I posted, I bought some GTBIF and I might buy more. You have to give me 1 second. So at the moment, the markets are just sort of getting jerked around according to the crude oil. Now, crude oil goes above this, then I have to think the ES is going to have another leg down. But at the moment, I see a non-event. So the SPX was down 18 and the SMH was up at 2. SMH is unchanged. I mean, that's where we are at the moment. Just a non-event at the moment. So that's all I'm seeing. I think the NASDAQ is going to keep the ES up, but I just can't stress enough. Dow Jones Commodity Index with the bonds. So the DJCI is settled down on the upper left. The bond market settled down. This is all about reverting to unchanged into the unemployment report. That's all it looks to me. It's unchanged. So what's that mean later? Well, definitely later. I just don't see it. I don't see the negative idea in here. If you want to be short some stuff and long some stuff, well, that's what we're doing. And that's about it. So that's about all we're doing. Now, I will tell you that when this is how we made money on the close. Now, I didn't initiate the trade, but other people did. So we were watching the SPX yesterday. Like I said, right now, the markets care about crude oil. They didn't care every day. So crude oil on the close yesterday, not this morning, but on the close was rallying. So our theory was that the S&P would go to unchanged, which is exactly what it did. It was 57.15 and went to 57.10. So as you see, it went unchanged. So why am I showing you all that? That's how people made money in a butterfly yesterday, about 300%. Today, crude oil's still up near its high, and guess what? The SPX doesn't care. So different days matter. That's all it means. Different days matter. And today, it's not mattering that much. So like I said, right now, what matters? What matters is everybody's caring about the unemployment report. Now, I'm not sure if you should care that much about the unemployment report, but that's what everybody else is caring about. Like I said, I don't think Powell cares. I think he cares about the Dow Jones Commodity Index. So as you see, it's selling off just a bit. See on how it went down? And the bond market went up. I mean, it's not a coincidence. Not a coincidence. So just keep that in mind. Chart patterns mastery. We're still long NTR, by the way. So NTR is commodity related. So we bought it on the dip because on a daily chart, it looks good. But the key is, what are traders looking at? What did I do when I was on the floor? What were we keen off of? Because every day is different. Is it the bond market today? No, nobody cares about the bond market. Does the bond market care about crude oil? Sure. So when crude oil had this pop up here on the upper left, I'm sure that the bond market was on its low. Crude oil settling down, bond market rallies. So bonds care about crude oil a little, but the stock market's not caring. It's just not caring. So that's something to definitely keep in mind in there, that right now the stock market just doesn't care. That's why usually you can go and do something neutral today because the markets aren't going to do anything. So just keep that in the back of your mind. So for me, chart patterns mastery, like I said, I bought a lot of GTBIF. So I'm in GTBIF. I keep posting it in there about that. So just keep that in mind. Second thing, and we go over these in chart patterns mastery and the central room. Central room is extremely important. So I'm just telling you, that's where, and the chart patterns mastery. So we try to show you all kinds of correlations in both rooms. So keep that in mind. So what else are we watching? Well, I'm watching transports. I'm watching Russell on the upper left. And the reason is because of this. Is because of what I showed you. So if these have massive rallies, then this doesn't have to go down. If these two plow through here enough, then I think this is going to pay attention. I think the only reason that the S&P has not broken down is because it's going to flatten before the end of the day, because traders don't want to be in anything. Now, because the S&P is over 5,700, I'm thinking about playing something under 5,700. So haven't done it yet, but that's what I'm looking to do. So definitely chart patterns mastery. I'm looking at something like this. Now, this is big and wide. I'm not posting the entry in here. We're looking at something like that. On the other hand, the market's shrugging off everything. So heck, they don't care about oil right now. So I'm not doing anything neutral. If I did, I probably would have done that trade. But I'm not doing anything at the moment. For tomorrow, unemployment report, well, I think after the unemployment report, people are going to be worried about what might happen over the weekend. So I look at this. How much is the market factoring in the unemployment report and geopolitical tensions? So let's go over it. So number one, the expected move today is 23. Nothing much is going to happen today. So not much is going to happen. Tomorrow, unemployment report. Yeah, 61. But if I'm right, the market might not do much. A lot of people are saying if the unemployment report's strong, then the SPX is going to go up 1%. Well, that's 61 points. The problem is this. Is this good enough? Is it going to go to a new high? So my thing is, I think no matter what happens tomorrow, if this bond market goes down enough, I think a lot of people are going to listen and sell the S&P. I mean, that's the way it looks to me. So that's where I am at the moment. But for today, I think it's a non-event. And that's how I look at it. So I'm telling you, though, this is how we're going to play later. On the one hand, yeah, the NASDAQ acted great. So the NASDAQ looked like a bear flag, and it looks like it's going to invalidate it. The problem is the overall NASDAQ, the advanced decline's down. So I'm looking at all this stuff. So just keep that in mind. I'm looking at all this stuff. And what I'm seeing right now is that at least the NASDAQ held. So the NASDAQ is really underperformed the ES. So our theory was that NASDAQ needed to go up. Or if it led to the downside, then this is more likely to go all the way down to here. At the moment, on a holiday and with the unemployment coming out, I think it's going to be a push. So on the other hand, if this NASDAQ gets over this, which I don't know if it's going to do, you have all this resistance, and I'll go over what I mean by support and resistance. But if it gets over that, heck, maybe you get the ES up to here. That's like 18 more points. Sure. But I think by the end of the day, if crude oil does not sell off, I think the the SPX goes back to unchanged. Now, I'm not sure, but that's what I'm going on. Now, just to let you know, the advanced declines on the New York, which is ADD, and the NASDAQ have not really improved much. So I'm betting that the markets are going to do nothing today. If they do anything, they'll go back down. Usually with something like this, I'd place something under the market. Something under the market. But heck, if the NASDAQ's up 100, guess what? Yeah, the ES is going to be up. But this is the kind of idea, chart patterns of mastery, I'm looking at. Something like this. Something like that. Or the SPX for that matter. This is a 10th of the SPX. So if you're not used to trading the SPX, you can go and do this. You're risking $55 instead of one SPX where you're risking 500. So that's what I'm looking at. I'm not doing anything in there yet. We already have other stuff on. So that's where we are right now. Now, for my money, the big deal today is going to be this crude oil on the right. It's going to be if the NASDAQ has another leg up. See that SMH? So I'm watching constantly a ton of indicators to get a tell. So I'm watching Meta act fine, Amazon coming back like a champ. I'm watching the semis acting fine. So I'm watching the bank stabilize. I'm watching the software stabilize. So to me, I'm watching Home Depot stabilize. So to me, I would play it back to unchanged. I think that's what traders are going to do. They're going to play it back to unchanged. And it's no more, no less. That's what it looks like to me. So chart patterns mastery. Go. This is what I'm looking to do. Now, I would rather do it with the SPX, but I'll go and log back in and post the trade. So this is just betting that the market does nothing. Like I said, it's all about reversion, about going back to unchanged. That's what I'm watching it going back to unchanged. So I went and posted in the chart patterns mastery. All we're doing is betting on this going back to 5,700. Now, keep in mind a couple of things. This has ignored the CL, the crude oil. It mattered earlier. It hasn't mattered now. When is it going to matter? The spikes. You get the spikes, that will matter. It doesn't matter at the moment. So if this has another spike, you'll definitely see the SPX down to 5,700. That's the way it looks to me, which means I'm not doing that much in here at the moment. So we're just waiting and seeing in here. That's what I'm doing, waiting and seeing. But I'll show you. I have up a number of different charts. So I have your big Mag 7 stocks up. I have a lot of chip stocks up. I have a bank up. So in the essentials, I can share this. Just share the grid. Not share the trade, share the grid. But if I'm playing the bond market, then I'm going to have up the Dow Jones Commodity Index on the upper left. See on how it just bounced? Went from up 5.6 up to 6.5. Yeah, the bond market sold off. So I'm watching all these. If all of a sudden I want to trade bonds versus the Dow Jones Commodity Index, those I'll put on the top. If I want to trade the ES, I'm probably going to put up a lot of ES stocks. And that's how I'm trading. So right now, I'm going on a couple of things. I'm going on number one. Crude oil is starting to uptick just a little. But what does that mean to me? It means that the S&P is more likely to go back to 5,700. That's all it means. No more, no less. I'm not saying it's going to crash or anything. I'm just saying reverting. When the NASDAQ is as strong, I don't think you'll see the SPX get nailed. So that's what I'm watching. And that's where I am. And so I'll give you a couple of other tells. Number one, I don't know if bonds matter. Like I said, transports the Russell. If you see the Russell go from down 8 to unchanged, yeah, the ES is going to be up. If you watch the Russell go down 20, then you can't write this off. That. Remember that? It's not past the point of no return. Now, I'm not using these as support and resistance. I'm using them to watch in relation to each other. This worked with the Nikkei earlier, it worked with the NASDAQ, it's worked all year. If something's too far over it, but a number of other indexes are way far under it, the probability is this is going down. Or a bearish pattern is more likely to work. Let's put it that way. And that's all I'm doing right now, watching this carefully, watching crude oil carefully, watching the SPX versus crude oil. So keep that in mind. So bonds are sort of going with oil, sort of. I would put up the Russell. I would put up crude oil. You have to have up because of geopolitical tensions. And I would have up the SPX. This is my normal setup. Down here, what are you noticing? The stocks that were the leaders, the NVIDIAs, the Broadcoms stopped going up. So what's that mean to me? Means the SPX is more likely to go back to 5,700. That's the way I look at it. So that's where I am right now. As you see, the Russell is rolling over. So that makes this more likely to roll over. And it has a little bear flag. But all I'm doing, see how crude oil upticked on the upper right? Like I said, every day the conditions change. Right now, the ES is incredibly sensitive to a spike in oil, not a little rally. So right now, SPX might go and settle down around 5,700. Might. If it doesn't, XSP, I'm telling you, we did it in a way that's as low a risk as possible. And that's all we're doing. Like I said, though, the lower the things that are close to their 50 moving average, if these break, sort of hard to see in here. If that breaks, then this bear flag is more likely to work. Remember 5,700? That's all you're doing. You got a little spike in oil. You got a little sell off in the Russell. That means to me the SPX is going down. So I'm trying to make this as that's how we do it. I mean, that's how we do it. No more, no less. We're not going crazy in here. But as you see, the second that NVIDIA sold off and that Broadcom sold off, then the NASDAQ refused to have another leg up. So I'm not saying you're going down whatsoever. I'm just saying we're going to flatten. That's all I'm watching is that we're going to flatten. And that's what we've done so far. We've just done nothing, which if you're a premium seller, that's what you want. Now, I will tell you a big warning sign for the rest of the day. It's going to be that spike and if there's any consolidation. There. So this is what we mean about working off an overbought pretty well. It worked off the overbought by retaining a bullish structure. If this has another spike up, you'll probably see the ES down 15. But that's a big if. So it's a slow day. You get things whipped around. So that's what I'm watching right now. I'm just watching things get whipped around, and all you're going to do is get frustrated. Like I said, on the one hand, you have geopolitical risk. On the other, if you didn't know, I put this out every Sunday night. I put out what the economic reports are. So all you do in here is go to investing.com. You go to economic calendar, and then we sort them for this week. We're being very US centric. United States, obviously. Now, usually I can't fit the sort of important and really important on one screen. But when I'm just sharing it during the day, I'll have it this way. And what you'll see is this. Today, you had jobless claims, ISM at 10. You have Bostic speaking at 10:40. He's already spoken. Tomorrow, unemployment report. You have some of these speculative net positions. You have Williams speaking. And that's about it for this week. But just go to economic calendar if you want this in your hip pocket. And like I said, chart patterns mastery, that's where you can find me on Simpler. So I'm sure there's a trial in there. There. And like I said, it's all about knowing what to watch. So right now, all I'm doing is watching the SPX do nothing. I mean, do nothing. I'm watching that Russell's holding. So the SPX is more likely to stabilize. I'm watching that, some NASDAQ stocks are acting fine. So I just think it's a non-event. Right now, non-event. So that's where I am right now. So we have some longs, we have some shorts. That's where we are. So in here. So we have definitely some longs. So shorts, we have things going out 2 weeks. So lower risk that way, because if I see a bear flag, I'll do it for this week, or I'll buy a put debit spread if it's bearish. If it's developing, like a top usually is a rounded top. That's usually how tops are. Bottoms can be V's. So that would dictate doing something like a 2 week out put fly if I'm bearish. So that's all. So I'm not doing a lot in here at the moment. Just sort of biding my time. But like you see, spike in crude oil on the upper right. ES had a downtick. Not a big downtick. But if this crude oil does break this bull flag decisively, then you'll probably see this down like 7. But at the moment, it's a push. That's just a slow move. It's the spikes that matter. So that's the way I look at it. So definitely that's what I'm watching. My first theory, advanced declines, are they improving? No. Upper left. Yeah, you could put these up here too. So on a different screen, I just have a lot of tech stocks. I have a lot of Walmarts, Home Depot, Lowe's. That's what I have up here. Home building stocks. This is what I mean. Everybody bearish on home building stocks because the bonds went down. Well, just keep in mind with hurricanes, with what's going on in the remnants of Helene, it's good for housing, good for Home Depot, good for Walmart at the moment, good for Deere. A lot of that's been in the stocks already. But this is what we mean about the bond market doesn't matter to housing today. It'll matter later, but it doesn't matter now. So that's what I'm watching. I'm watching that as the market rallied, banks went down, and nothing else moved. So if nothing else is moving, I'm just not doing a lot. So that's where I am at the moment. And like I said, you're seeing just nothing move. So SPX, I'm not touching it other than something that's a tenth of the SPX. Not doing anything else like that at the moment. We're already in a Home Depot that's a loser. We're in other things that are winners. So we're just going to stay in everything we're in. Now, I will tell you regarding the close, if the crude oil is here and hasn't sold off, then at the last minute, I'll play the SPX. So that's where I am when it comes to all that. I'm watching a lot of different stimuli. So just keep that in mind. Like I said, I can't give specific advice in here. So all I do know is I only buy things when they turn. So when you look at WBA, I'm not going to tell you to buy it or sell it. But I'm telling you, you got to wait for a break. That's the biggest mistake I see is buying it on the way down. It's going to be a better buy if it gets over that. That's how I look at it. So just keep that in mind. It worked with Humana. Humana on the way down. But how did it work yesterday? You don't buy it on the way down. You buy it when it consolidated and then had a defined rectangle. So you're not going to buy the bottom, but you're going to buy the correct direction. So I don't just buy something just because it's down. I like to buy on the way up. So I just can't stress that enough because you usually only have a certain amount of capital. So maybe you'll get bailed out. I'm watching over and over other people buy things on the way down and get bailed out. But the problem is there might be an amazing setup, but you're already financially and emotionally attached to a loser. So I'm just telling you, the way I like doing it is definitely to wait for the break. So you're using your emotional and financial capital correctly. That's the way I'm looking at it. And as you see, non-event right now. Now, what would change my opinion? Well, number one is if crude oil had a spike. Number two is if these trend lines start breaking. But they're not. It's a non-event. ES unchanged. I think if the ES is up 10, you play it unchanged. ES down 10, well, we got to see why it's down 10. So I just don't see the trade. Chart patterns mastery, still long GTBIF. Like I posted, I bought more of it. And as you see, the NASDAQ just stopped going up. So everybody has been watching the NASDAQ for direction. Everybody. So if the NASDAQ refuses to have another rally up, we saw that with NVIDIA and Broadcom. These went to new highs. NVIDIA and Broadcom didn't. Microsoft didn't. JP Morgan didn't. What's that mean to me? It doesn't mean you have to crash. It just means you probably aren't going to do anything. So that's the way I look at it. And you see what I'm talking about in here. I'm watching micro trades. I'm watching that the NASDAQ got under here, which made the ES less likely to break up. That's all. All you're doing is watching the probabilities. So what would make the markets go crazy? Well, number one, if crude oil went down like a point. Number two is if the NASDAQ broke up, not down. At the moment, it just seems like a non-event to me. And I'm watching everything like a hawk. I don't see going crazy long or short. I do think by the end of the day, I'll try to play it to unchanged. So try not to jump the gun. And that's how I'm looking at the markets in here. So it means just being patient, being patient. And I'll tell you right now, if I want to do a trade for Monday, now I don't know about doing a trade for Monday because the volatility will stay up because of geopolitical events. Plus, I'm not sure what the markets are going to do in the meantime. Like I said, you got to be real careful about that gap down here. Just keep in mind, all we're doing right now is basically nothing. All you're doing is that, futzing around. You got the resistance up here, and I want to go over that. I have like 9 minutes. How do I determine support and resistance? I determine it. I start with price. Price is number one. I don't use moving averages blindly as support or resistance. I'll combine them with things. But if you want to use a moving average, which is fine if it works for you, combine it with a reversal pattern. So if it sells off to the support or your idea of support, wait for a reversal pattern to initiate a trade. I mean, that's the way I look at it. So, but I'll show you support and resistance to me. Here is the S&P index, non-cash. Forget about the MACD on the bottom. So you're going to see in here these moving averages, which to me don't show you a thing. So they're under it, they're over it. But where is real support? Where is real resistance? That's what I watch. So your resistance is that zone, the prior tops. The support is this zone, the prior bottoms. And that's it. So you're stuck in that zone. That's why really about 57.20, I want to play it to the downside. And that's where I am at the moment. Only for today. For next week, you still got to respect that it's a triangle. It could go either way. So that's how I'm looking at the markets in here. So that's what I'm watching. I watch that price support, price resistance, and it's a zone. Anybody that tells you it's like to the like penny resistance, that's ridiculous. All I'm watching is prior tops and prior bottoms. That's all. And trying to combine it with other criteria. Crude oil, the NASDAQ, the Russell. That's why all these moving parts matter. If you look at this now, I'm going to go take this on a 15-minute. There's your support and resistance. Prior tops, it's a zone. So really the zone is this. We'll drill into this right here. There's your zone because you get those little twerks to the upside. Right in there. There's your zone. Really in here. Unfortunately, it's a wide zone. It's a wide zone because you're in like a holiday period. On the bottom, sort of this zone. So it could definitely go up to here first. I'm not sure I'm going to play that, but it could. So how about the NASDAQ? Well, the same thing. There's your resistance. There's your support. If it gets over this, which it did earlier, it gets stuck at the prior bottoms because those bottoms become resistance. And so right now, I don't see the trade at the moment. And this one, if I were you, I would put up these multiple things. So I would put up what I have up. So you could actually go in here in the SPX and show the resistance. You see right now it looks fine. So it could be a trend line, but I would say it's this zone on a holiday day where people are worried about geopolitical events. It looks like a 20-point zone to me. Now, I could be wrong. Maybe this trend line matters. Because there are all these opposing forces, I'm not doing a thing in here. So we have some longs, we have some shorts. That's all we're doing. But I would watch those resistance zones. Now, if you can't really draw a good resistance zone, then don't trade it. There. So I'm going to clear this. And there's your resistance. That's 57.20. So sure, if you get over this, you could get to that. So if it gets over that, you got a big hurdle here. Right in there. There's your support. There's your two resistances. Here's a little support, prior tops, prior bottom, and then you have that 5,700 that could be a magnet. And that's the way I'm looking at the markets in here. Which means non-event at the moment. So really what I'm watching in here is number one, that resistance zone. I'll go and put it here on a 5-minute chart. So here's one of them I can share with you. I can't share it in the Restream room. I wish I could. So there's one resistance zone. Then you have the S&P resistance zone. So I'll share that with you just so you have this in your hip pocket. When it's in the kind of mode it is, where it's slow, I don't do a lot. So what am I going to key off of? Number one, I'm going to key off that Russell. Is that Russell going to be able to reclaim this resistance zone? The more times you could connect points, all those candles, the more valid it is as resistance. So I can't stress that enough. Just like here, the more little touches, the more valid the bear flag. So as you see these two bear flags, look at all those touches. So now it's just stopping at resistance. So when that sold off, everybody gets spooked that, hey, the ES could sell off. So what did the ES do? It's all moving parts. The ES stopped going up. So I just can't stress enough. Russell selling off means the ES isn't going to go crazy on the upside. And it hasn't. So everybody take care. Thanks for being with me. I hope you find this enlightening. Like I said, the reason I'm watching the Russell is because of the chart I showed you. The Russell and the transports. So when you watch the transports, stop going up. So if you go put a 1 minute chart, you'll see they downticked a bit, not a lot. But because of that, and because it's close to the 50, and because the Russell's close to the 50, if they start selling off, it just means to me the ES is less likely to get above resistance. So it's all about probability. So thanks for listening. Have a good one. Talk to you later.